Hey traders, welcome to Charts and Coffee. We're coming out of non-farm payroll here this morning as we start off the show. And NFP has been, it was a good number. So let's talk about the three headline numbers that come out. I mean, yes, the non-farm payroll number printing at 272 when expectations were ranging from on the low end, what I saw about 180, on the upper end at about 190. This is a obviously far larger than expected number. We are still in a good news around jobs is bearish environment, obviously. And by the way, the small sliver of a chart on the screen is the 5-minute there off to the left. We're looking at the daily time frame as well. So let's step back and look at the daily for a moment. Is this catastrophic? Is this taking back all of the rally that we saw on the 5th? No, nothing like that at all. There are two big events that we're going to see get processed, digested at 9:30. And the first is obviously now stock traders and stock options traders have their shot at what they want to react to, how they want to position based on the number that we saw. Interestingly enough, the unemployment rate ticked up 1/10. That's not good. And the wage inflation was actually better than expected. So we have three big numbers, non-farm itself being the biggest, but then the other two rather important numbers we would consider to be more bullish. So non-farm payroll bearish, those two numbers are bullish. And you can see we sold off based on that headline number being as big as it was. Had that number been flat or just a slight miss, we'd probably be up or flat, right? But because that number was so much better, it offset to a large degree what happened with the other two metrics. But you can kind of see sell off and hold. Nothing catastrophic. Yes, we're going to open up today below the previous session close. But I like the daily in the wake of a hot zone because it's amazing how often the daily just sort of gives us that take a breath moment, right? Which is this catastrophic? Not in any way. If we're living and dying by the 5-minute, we're missing the point, which is the NASDAQ is still well supported. However, let's jump on over to the second big event today, and that is the NVIDIA split. Now, do I have some disproportionate belief that NVIDIA is everything that we should care about? Oh gosh, no. But why is NVIDIA important? Why is this stock so important to even index traders? Because it's heavily weighted in the indices. So when we get into the split that's coming up for Chipotle, the CMG split, is that going to have nearly the NVIDIA impact? Of course not, because the NVIDIA impact is because of its weighting, right? The NVIDIA impact is because it's weighted heavily in semiconductors, XLK, which by the way, are two of the leading sectors in the last month. When we line up all the sectors, look top to bottom, they're still atop the leaderboard. So NVIDIA's weighting is what makes it so important. And that's why we have to watch it the way we do. Is it the most important stock out there? No. However, it's heavily weighted. It's got to be considered one of the Magnificent Seven, which it is. Magnificent Seven, not so coincidentally, is heavily weighted in the S&P and the NASDAQ, those indices. When this event is done and we start to see the profit taking, which is what I would anticipate seeing. Now, remember, anyone who held NVIDIA through the close gets their split now. Now, here's what's hilarious. I don't know who would have wanted to buy NVIDIA at $12.55 yesterday. Okay, they've got 10 shares at $125. Well, anyone buying in the wake of the weakness, the profit taking, is likely going to have a fill at $121, right? And this is what we talk about, the profit taking of traders who played the split story between the earnings announcement, when they announced the split, and the split actually happening, which is today. That should trigger some profit taking. I'm not saying NVIDIA is going to turn into a downtrend, but we will look for a pullback. The way that I would like to play this best is through the SMH. So this dilutes NVIDIA a little bit in terms of impact, and we can take advantage of other strength names in the semiconductors. So that's the next thing we're dealing with. We're moving from non-farm over to NVIDIA. All right. So good morning, everybody. As always, if you have any questions, if you have any symbols that you want to take a look at, let me know. And let's jump into our first question. First up, Line Watcher asks, is this a neutral farm? No, I would say it's not neutral because of the three big numbers, non-farm payroll was such a such a beat. It was so much higher than expected. 180 to 190 was the expectation range. And then all the way up into 272. That's a big number. So I would not consider it neutral. Wage inflation was good. Unemployment rate was weak. So that offsets a little bit, but this is not a neutral event. Yeah, this was good news. I mean, on what planet and what reality is more jobs bad? It is when the Federal Reserve is hemming and hawing about when and how many cuts we're going to get. And that's where I would not expect a bunch of weakness on this. The overall strength in the overall indices should help hold. I'm not looking for a big sell-off day. It really does depend on what Nvidia is going to do, because it could have an outsized move. But if it doesn't, again, there's nothing about non-farm that's going to change my opinion about whether or not the Federal Reserve is going to cut. It's really a matter of when. So let's not guess about it. Let's jump into the data. June 12 was never on the table. So please don't look at June and say, oh my gosh, they're not going to cut next week. They weren't going to anyway. So in 5 days, status quo, we're still looking at a hold in June. Frankly, we're still looking at very much a hold in July, which really is no big difference. We've been waiting for maybe September, November, December to be in play. There hasn't been much a change in September. So if you're looking at the CME FedWatch tool, which you could just Google CME FedWatch tool, and then it'll give you this link to the CME's page, this is still a 50-50 shot. And it really wasn't much better than that before NFP. So NFP did not change macroeconomic hearts and minds. November is still largely a yes. And it is still looking like, as we round out the year, we will see one, if not two, maybe three. I would say that's a very slight maybe. And why do I say that? 38.2% that will be at when the meeting happens on December 18, when they release the statement and the rate, will at least have a quarter point cut. And then there's a almost 38% probability that we will have already cut in November or September, and then we'll get that second quarter point cut for the year at December 18. And there's only a very slight, under 12% chance that we will get the third cut at the December meeting. So you can see the probabilities are there. I don't have to guess. The data is there, and the data is coming from actual trades in something called the Fed Fund Futures, where its sole reason for being is to allow traders to speculate on what rates will be at each one of the meetings. That's the way the contract's designed. So this is not an earth-shaking number. No, because again, unemployment rate and the wage inflation should slightly offset that monster 272 print. All right, let's move on to the next question. And that is, can we take a look at NEE? Yeah, great question, Ryan. NEE has been on the radar in the Sector Secrets Mastery. And in that sector, Food Dojo, we have been acknowledging the absolute resilience of utilities. Utilities are considered a defensive sector. It's where traders like to be in case, well, the you-know-what hits the fan. It's a place where people go, well, you need power. And if traders are looking for a place to put their money where there might be some stability, it's not about alpha. It's about just finding something that could hold. XLU continues to be up near the top of the list. We go down to the number one holding in XLU, and that is NEE. And NEE is holding at the 21 propulsion, which is a variation. Look, if you have a 21 EMA, that's fine. This is going to give me a little bit different to read. Also, it's going to turn on and off. So when should I ignore the 21, right? When should I not acknowledge that it could be support? And propulsion is what I like to consider a self-correcting exponential moving average. So you can see there, great Darvas support at the 21. It's an aggressive mean reversion level. It's a pullback. Yeah, in the context of a trend. So we do like the long side of NEE, absolutely. And there are some other stocks in utilities that are worth looking at. Southern, Dominion, Duke. NEE is probably near the top of the list for me. So yes, I would look for a buying opportunity in NEE near the 21, near that Darvas support. That's sitting at, survey says, 76.5. All right, moving on then. And by the way, today is the last day to take advantage of the Memorial Day sale. And if you have not yet, grabbed your favorite fill in the blank course, indicator, mastery. If you have not grabbed that yet and you're kind of kicking, you're wondering, I like to kick the tires on the daily price movement ranges, Rog. Do these things ever go on sale? They are on sale right now. So if you want to go grab hourly price movement ranges, the daily price movement range, or even join me in the mastery, you can do so right now. When you check out, type in MEMO 30, boom, 30% off. All right, next up is Miles asks, I often find the best way to trade payroll is via currencies. Miles, I typically like to pass on the currencies. I'm with you in that there will be reaction there, but there tends to be a lot of outsized reaction. What do I mean by that? There's a historical volatility measuring stick, if you will, and we can look back on historical volatility and say, hey, what is the probability of the resistance and the support for a hourly chart, for a 1 hour chart, a daily chart? Where could that support and resistance be? And what I have found on these super macroeconomically impactful days is that we tend to push the standard deviations. So if you've got the daily price movement ranges, hopefully on that 30% sale, and you're going to play currencies. So Miles, yeah, they're definitely in play, right? So if you're looking at a buy in the say the euro or the pound or the yen, if you're looking for a setup there, I would say your starting off point would be the first standard deviation of the daily price movement range. And that's right there. And that's sitting out. Let me give everyone a price to give you an idea of just the crazy accuracy of that for hot zones. 108.29. So call it 108.30. That would be the level at which the first standard deviation of the daily price movement range kicks in as support. Pretty cool range. And if you're looking at a range like that for non-farm, I would look at a zone between the first and second standard deviation. Everything is going to have a reaction to NFP in terms of, I say everything, bonds, currencies, indices, right? So what about bonds? Let's go take a look at those. Same idea, right? I tell my traders during hot zones like non-farm, do not play treasuries. Too much volatility. And you can see here, absolutely berserk. Although I love this because I'd like to be long bonds. And this is going to give us a nice sell-off that we can start to look at maybe Monday or Tuesday of next week. All right, next up is MU. Sure. So MU is going to be in that semiconductors window. Bear with me one moment. This sun coming in is bonkers here. All right. There we go. All right, MU, in terms of what we want to do with MU, if I'm looking at MU, I don't need to be that big. My gosh, Rog, where's my, there we go. All right, so MU, get that camera squared away. There we go, MU, nice trend. Would I look for a pullback? Absolutely. I probably wouldn't even start that conversation until close to 125. Remember, the profit taking, and there's going to be some profit taking in NVIDIA. So the profit taking in NVIDIA should drag the SMH down, and it's going to drag other stocks within that sector. Hopefully, I say hopefully because I'd like a buy the dip, should take those a little bit lower. Sun is bonkers today in this office. All right. So that's MU. That's MU. All right. Next up is Tesla. Sure. A lot of chatter about Tesla the last few days. All right. I saw my first Cybertruck. So I was cruising around, and my car is kind of low. I have a smaller car. And this literally it blocked the sun. I'm sitting at a light, and all of a sudden the sun was gone. And in Florida, that's a thing. So the sun was gone. I look around. What is going on? I was flanked by two Cybertrucks. Those things are huge. I think I could have driven my car into the Cybertruck. All right. So yeah, I've been seeing those cruising around. Sideways action on Tesla. So this is what I would do with Tesla if I were trading it. I'm not, but this is what I would do. Wait for the green or the yellow candle to come down into this zone. It gives you two choices. One, and I would expect the support to hold, right? So as it's moving back higher, I would look at the halfway mark as a first target. And when you have the daily price movement ranges on your chart, really easy to see what that would be. Or you can even just pull a retracement from the lower edge of the resistance to the upper edge of the support. And the second target would be up in here. And as you can see, Rob, there's been some opportunity to go back and forth within this range as long as you know where the range support is, right? That's what's so important. And I would say I would continue to treat Tesla as a bullish setup, but acknowledging the range bound action, having a slightly more aggressive first target, second target up in the gold zone. That way, if we don't hit the gold zone, sometimes we will, sometimes we won't. But if we don't hit the gold zone, you've already scaled out, paid yourself, right? And move to a break even. And then you can just refire it again when it gets down into that zone. So Tesla is not in a trend. But if you're waiting for what it's going to do next, right? Rog, what if it breaks out? Still use the tactic that I just described. Get long near support, take profit halfway through the range, and then that's that other part of your position that you have because you only scaled out. If and when we finally break out, which I would imagine we will, but I don't know when. If and when we finally break out, a la Meta, right? Meta finally broke out. So think about what you could do. Same thing. Meta did the same thing. In that area, right? Take profit maybe halfway through. And then when we do get the breakout, you're already in. You're not having to chase this thing higher, right? You're already in. But the Darvis does such a great job of defining that range along with the daily price movement ranges. One of the things we've been talking about in the mastery is the volatility that the daily price movement ranges can warn us about. You might say, Rog, that looks so funny. What is this pattern? What are these? Those are shark teeth. When you see shark teeth, I used to wear a little shark necklace in college. It looked just like that. And when your daily price movement ranges look like shark teeth, you've got a pretty volatile environment. But all the same, the daily price movement ranges do a great job for support, or even the Darvis. And if you grab the lower end of a range where you're anticipating the breakout, and it is an anticipatory entry, right? But we also want to be able to scale out when we can, not when we have to, and then pay yourself. And then if and when the market breaks out before the expiration of your options, you're already in. There's nothing for you to have to do. So Tesla is a lot like, although no shark teeth on Tesla, but Tesla is a lot like Meta in that that's the way I would set up. And you can see how Meta responded. And that's what I would look for on Tesla. All right. PDD. All right. PDR Holdings. That's a mean reversion. But if you're not already in, it's starting to wobble a little bit, but that is a mean reversion. I would also look, John, at where else PDD has weighting and importance to see if that sector is actually moving higher, whether or not there's general interest in that place, because interest is dollars and dollars are flow and flow is movement, right? So yes, it is borderline a wobbly mean reversion, but it is indeed a mean reversion. All right, next up is, let's see here, TXN. So 59. TXN is in the same boat as AMAT and Qualcomm and any of the uptrends that are in the SMH. I like the SMH itself. So I would say before we go into an individual stock, consider the sector. And ultimately, having the sector move higher or lower with NVIDIA is going to be where the opportunity is. Take a look here. Where is the support? And you can see here that support sitting at about 190 and a quarter. All right. So that's the way I would look at that support in TXN. And that would be the timing. That would be the trigger for the long calls. I don't want to buy them here at 196 or wherever they sit at the moment, but I would wait for that Darvis level to get hit. It's going to give you that wonderful opportunity to say, Rog, could I take profit halfway through or take profit at the upper end of the range rather than waiting for the breakout? That's the advantage exhaustion traders have over momentum traders in an environment like this, where we have some defined levels. All right. And just like that, wrapping up the show. Thank you as always, gang, for being here for Charts and Coffee. We'll be back on Monday. In the meantime, please do take advantage of that sale. It ends today. If you've been wanting hourly price movement ranges, daily price movement ranges, or want to join me in the Sector Secrets Mastery, use that code 30% off. I'll see you next week.